I would love that everyone that listening feel to kind of like ask question and kind of like challenge
Both there's something in
our
common
view.
about the world of entrepreneurship and the world of investment. They're all about going head first into uncertainty.
There's nothing wrong with challenging people's opinion. We're in a free world. Let's challenge it, right?
Yeah, let's debate it.
Sam, my friend, we finally started,
We finally did it, my friend.
and here we are from an idea to something that is becoming concrete as of today. So I'm
Yeah.
extremely excited of what we are building.
I remember we were doing
And
dumbbells. We were lifting at the time, and we decided, yeah, we should do a podcast together. And a few
yeah,
months later, here we are.
here we are, especially with something kind of like from different angles of our experience in our lives, but coming kind of like together in this. I don't even want to call it an initiative. It's kind of like a mission at this point that we have to bring awareness on capital and what that means really to entrepreneurs and investors, builders, anybody, right? So and coming from different angles of our experience, our lives, and especially as you know from my standpoint, the different ways we interpret investing capital and where basically we kind of like uh, see the value of this capital for us. So
Yeah.
I'm excited, but yeah, where should we start?
Well, for me, it's been a tremendous journey since getting to know you. Just understanding the other side of capital, because I was an investor when I met you, and I was always looking for interesting companies, interesting entrepreneurs to deploy my capital to. I didn't have a really general thesis at the time. I developed my thesis as through our conversations together and learned what I wanted to invest in. And it's been a fantastic learning opportunity, learning from your experience, multiple ventures that you've had, and um, just this learning experience was so tremendous. I thought we should expand it. We should learn more. We should learn more about more assets classes that we can invest in, and also different forms of capital that you can raise. So there, the difference in on our perspective, me looking at things as an investor, you looking at it from a entrepreneur's perspective, taking in capital. It's just such a fantastic conversation. And I'm excited to start this with you.
Likewise here, and everything started with the most stereotypical way of how entrepreneurs meet investors, with an elevator pitch, and in our case was really an elevator pitch because we live in the same building and we met in the elevator, and I pitched you my idea while we were going from your floor to the ground floor, and you
Yeah,
said we should talk. And at the time, I was raising for our seed two for the startup I'm working on. But yeah, we come from different perspective, and like you just said, the beauty is that in our conversations we kind of like bring different angles. Like in the recent times when I was facing some sort of like questions for myself and my business, and you brought your kind of like more, I call it traditional, but more kind of like corporate, more kind of structure capital view. And that was for me, in pure honesty, a great motivator and trigger to kind of like take a different direction with the company. And it all came from, once again, a coffee and an open conversation on sharing where my quest and my struggles were, and you giving a very honest, friendly point of view and kind of like funding that path forward. Um, but let's start. Sam, who are you? Because 8 point whatever 9 billion people, or I don't know how many people there are in the world right now, 8 point something billion people don't know who you are.
yeah.
So tell me, tell us, tell everyone, who is Sam?
Well, to start, I'll start as a when I was young. But when I was young, my dad had a factory, and I remember I think I was 7, 6 years old. My hobby was to go into his factory and play with all the machineries that he had. He had a drilling machine at the time. He had a lathe machine at the time. Just going behind these machines and learning to operate them. He had an iron casting section as well, and the person who was operating this iron caster was my favorite person in the whole world. This guy was a superhero to me because uh, the things that he did, the amount of heat that he could endure, the toughness that he had, the passion for his work that he had was tremendous, and he became a really good friend of mine. And he taught me a lot of things in the workshop. So I used to go to my dad's factory almost every week, 3 days a week. And it was just so much fun for me. I was a curious kid since I was very young. I always wanted to learn different things, different aspects. I always looked up to people who were successful and did big things in their life. And I think since then, I knew I wanted to do something big. I wanted to build something big. But before I did that, I knew I needed to learn, and I've been on a learning journey till now. And now I'm focusing on some building something big with my company. But um, I was young, I was curious, going into my dad's factory a lot, going into his meetings a lot, learning some of the stuff that he did, learning from him a lot as a young kid. Moved to Canada when I was about 12 years old from Iran. And this was one of the best things that happened in my life. I love Canada because of that. Went to school here, so, I went into computer engineering. I became a computer engineer, worked in computer engineering for a couple of years, decided that it's not, I'm not the type of person to sit behind a desk and just code. Wanted to do bigger things. So I got the opportunity to join my dad's family business and my manufacturing company in Iran. And I made a move and I moved back to Iran, even though I love living in Canada. I needed to do something difficult. I wanted to do something difficult and big in order to learn, so I can build a platform to starting my own business at a later time. So I decided to move back to Iran. Very difficult move. Moved to one of the toughest cities in the world. Not really an entertaining city at all. Very industrial, very hot, very bad climate. But it was one of the most tremendous experiences I ever had. I lived there for about 10 years. We scaled that company massively. When I joined, it was a 250-person operation. At our peak, we reached 1,100, and we became number one competitively in our space.
Wow.
Yeah, we made investments, we made, build more factories, bought a lot of more machinery. We had actually had a lot of good relationship with Italian technology providers, and we had people from Italy come in and tell us what to do in terms of machinery that needed to be built so that we could move up market. Anyways, we did great for that with that company. I exited and I started a family office with my brother because I wanted to get into the investment world about 7 years ago.
Mhm.
Um, as a good Persian, we always have to have a good real estate portfolio. So I started I started building one through my family office. Started investing in real estate and development. We started developing multiple projects at the same time through that investment vehicle. Very good learning experience. The, my biggest investment, it's still happening. It's still one of the one of the best performing investments in the family office. And actually looking for a liquidity event right now. But it's been such a tremendous learning journey from operating a business to learning the other side of it, learning the capital side of it now, and how capital and money can change the status of a business from what it is today to what you envision it becoming in the future. And I learned how to take companies from this stage, from this level that they are currently to that level. Let's envision something big. Let's envision something better, and let's plan how we can get this company from this stage to this stage, and make through investment, through changing a lot of things. And this is the whole topic of this podcast for you and I, is that the game of capital. What what types of capital are we talking? Are we talking brand capital? Are we talking social media? Are we talking human capital? Are we talking just money as a form of capital, debt or equity? The types of capital that you can utilize to take a business from one level to another. That's become my passion. That's become my expertise. and that's why I'm doing what I'm doing today, which is I've started a private equity firm my own. But I've hired a very tremendous team, and we're looking to acquire manufacturing companies across Canada and scaling them. So that's what I'm doing today, and I think it's been a tremendous journey building this thesis with you, and the story you told. Yeah, we were talking, and I provided as much advice as I could, but so did you. You gave me tremendous feedback. You introduced me to very good people that gave me tremendous feedback, and you helped me refine my thesis from what it was at the beginning, which was very wide, very broad, and we narrowed it down to something that is more fitting to me and has a founder thesis fit. So I tremendously appreciate the talks, the chats, the strategic conversations that we had, and that's what's behind this podcast is that we want to take that live. We want to learn more about the investment game. We want to learn more about what other people are doing, what other people are building, and how they're strategizing their capital deployment. And that could be just not just money; it could be their people, their brand. How are they leveraging the capital that they have to build something big? And it's and that's the whole idea for me behind this podcast is for me it's still a learning journey. I want to learn from people like yourself how you achieve what you achieve in your life, and we want to invite more guests from different realms, um, from the real estate realm, from the venture capital startup game, from the private equity game. We want to understand different aspects and how different points of view that that people take on these types of assets and what they're working on. I think it's going to be a tremendous journey. I'm really excited about it, and I'm very excited that I'm doing this with you. But enough about me. Let's talk about you a little bit. I wanna
Uh,
I wanna learn the history. I wanna learn what you were like as a kid, and tell me about when you started your first company.
yeah, I come it's kind of nice also our story, how we come from different of a perspective in things, and I think that's what gives value in those conversations. But I come from a family that actually made a fortune out of real estate, and I've always been passionate about computers and about technology. And I remember sneaking this conversation between my mentor, who I call my mentor, this person that I kind of lost a little bit contact with, a friend, one of my father's friends, Giorgio Lugaro, that told to my dad, "You should invest in Lucas and his passion for computers because it's gonna be something." And my parents has always been supportive of this passion. Like I've been kind of like exposed to Commodore 64, the whole Amiga, the whole PC revolution until I really got into kind of like disassembling thing. And for me, disassembling was way more interesting because I could look at inside of things, right? And I think that has always been my one of my drugs, if I can call it in that way, is one of my obsession is to kind of like not reverse engineering, but kind of like get to the depth of things in a way that they understand the primitive, right? And so, yeah, my first company was basically when I was very young. I was between 12 and 13, and has been the beginning of my journey to basically this passion of building and selling companies. I don't make it a secret. I'm obsessed with the alchemy of technology, transforming technology into money. And I've been through different phases of like building a company and making money. This company that I'm building right now is my fifth company, and I'm looking forward to kind of like take it to the level where it belongs. But I've been through any phase of like having money and being broke, and I'm not ashamed of saying that. I like it was part of my journey, so much that my last company I basically sold it, that I had, I don't remember exactly, but probably 8,000 euro of debt on my credit card, and I was living literally on a credit card in an apartment in Bellevue, and I generally didn't know how to go back to the Netherlands because my biggest thing has been kind of like breaking that relationship with my motherland, with Italy, to kind of like feel the freedom that I needed to be creative. Like my obsession is also the one of that sense of freedom, right? And so I lived a little bit everywhere in the United States, in Asia, in Europe, and the Netherlands. That I mean, Amsterdam is still my home, where I feel grounded, and always connected to technology one way or another. Like to me, I always say that to me, working corporate or working, it's paid R&D. I usually use the work to find my next venture, where I want to go and find. And I did a lot of investments in my when I sold my last company. I invested in pretty successful in some companies, and I kind of like build what I call one side of wealth, the wealth related to having money. But I think the other wealth is what you were describing: this knowledge, this learning, this continuously improving and pushing your boundary of the target, right? And so I always built this company by myself. I was a solo founder, solo exiter, and a person that never really believed in academia, but in pure, in, you know, uh, I call it not really groundwork, but like literally street work, like being on the street. And yeah, and so in 2022, I decided to found this company with a friend of mine, Matteo, and our idea was to try once again to play a revolution in the world of the tech. We picked a technology that was very close to us and where we had a very deep connection, and we ask our question: can we create value out of it? Like, can we do this alchemy again? And so I've been through the phase of raising money, because all my companies, I'd never raised money. Like, generally, I was on the other side giving money after the last exit, but I was never there going fundraising. And this was like, it was not my first rodeo in fundraising, but the real rodeo in a scale that was meaningful, right? And so taking the company from being worth nothing except a note on a piece of paper, to taking the company to a valuation that was very interesting, and being on this journey of growing the value. So for me, the game of capital is really, there are two aspects. There is the game, and in every game you learn, right? Because that's how you improve. And for me, there is an aspect that is very interesting, that is the gambling side, if you may. Is kind of like playing the game of capital, like, how do I really raise money? How do I grow the value of my company? What are the variables that make this company worth something outside of the traditional, EBITDA, revenue, um, margin, profit, and so on? Like, it's purely like, how do I create this value? And on the other one is, how do I learn, making it a system and not just like a feeling, right?
What do
Um,
you mean by that?
we all know that this multiplier thing is just, it doesn't really work. Like, we all know that the value of the companies, until they really reach public market, or a market that is valued enough to give it that value, is just a number that venture capitalists, they put down based on some trends, some analysis, but it's mostly feeling, right? I feel that this is worth $100 million, right? For sure, every VC that is listening to this, or every person involved, will disagree with me, and I'm very happy that they disagree. And I'm extremely happy that they disagree, because I would love them to prove me differently, right? And there is nothing bad. I think feelings are great. I think that's the kind of like sentiment. We put emotion inside of money. It's nice. Is tactile almost, right? But to me, is kind of like growing a business. It becomes almost like, how do we take a business from being worth $100 million to $1 billion to $10 billion to $100 billion, right? And that requires a different type of mechanics, right? I still believe that there are a lot of situations where you have companies that are worth $10 billion, but there's still a lot of like good faith in that valuation, which is nothing bad. But there
Is
is
that
also,
is that good faith in the future of that business? Or
yeah,
is it good faith on in the founder and what the founder
both.
is going to do with that business going forward?
Both. I think the founder is such an important component in the whole story. Like I really appreciate what Mark Zuckerberg did with Meta. Like he is the final decision maker. He cannot be fired by the board. And I think that that should be such a de facto standard in companies. While history taught us differently, right? Investors and the board will take over if the CEO is not capable of running the company. At the end of the day, I deeply believe that, and it's something that I believe not to protect myself, but I believe it because it drives the best interest of the company. Is that healthy balance between founders and managing operations, right? Two different things. I don't think the CEO should be that eternal figure inside of the company. I think the company should elect the best CEO to take the company to that vision. But the founder role is the vision of the company. It should never change. Um, and there is the other side of the capital game, that is the side that to me is more unnatural. That is, okay, once that you have capital, there are different ways of deploying it, and is real estate one of them? My worst enemy. Um, I still don't believe that investing in real estate is a good investment, but that's my point of view, and that's why.
We can argue.
But that's why you and I found this game of capital, because I want to learn from experts and people that made billion of dollars
Mhm,
and say, but I can make $1 billion with a great idea. Your path is more predictable
mhm,
and is slower. Mine is faster but highly unpredictable, right? They're all
mhm.
valid, but they require two different spirits to be, you know, to be the right ride for each one of us, right? And for you,
Yeah.
right? You and I have such a different way of approaching this thing, right? That's why it makes it very compelling to have these two facets, right? These two faces of the same metal. But yeah, I mean, if you're asking me, like my excitement in building this adventure with you is that I definitely want to learn. I definitely want to hear from your network, and I want you to hear from my network, like we came to this point. But the other thing is, I would love for everyone to actually. I have a theory that a theory that I use in all my career of like going for public speaking, for conferences, and so on. You are investing time in listening to my talk. You must come out of this talk, this 30 minutes, with one thing that is of high value for you. And your thing might different than my thing than anybody else's thing, right? But you must write on your notebook one sentence that is the value you get out of this conversation, one topic, one learning, one connection, one thing. That's the most important thing.
Well, let me ask you something. Who do you wanna reach with this podcast?
I want to reach I want to reach mostly people that they are approaching the same journey I already rode once, and I want them to kind of like learn from hearing not just from myself and yourself, but from other people, that they give their own perspective. Like last week, we had this beautiful in-person coffee here in Vancouver, right? And I met incredible people with different backgrounds, right? And everyone was listening to my story. And then I generally came out of that conversation, meeting Jeffrey, and that I hope we will have one time to talk about this theory that is very dear to me, the platform as a service, the software as a service, the economy versus the economy of 2026. And him and I had this exchange where I literally came home and I wrote down, I'm a fountain pen collector, but especially I write to remember and to express my feelings. And people can Google me and find all these things. There's plenty of recording I did, but one thing is I literally wrote down in this notebook what I learned from meeting and to talking with Jeffrey, because that thing was important for a strategy I'm putting in place for my own company. And that's the thing. I invested time, we invested time, but my learning was like the 30 seconds that is stuck in my head and I will use. And I want everyone to have that opportunity. So who am I reaching to? All the people that are creating a company and they are trying to face the challenge of raising money. And raising money, you need to understand who is deploying money, right? Because you
Mhm.
don't have to raise just from VCs. I could go to a real estate developer, talk to him about this AI revolution and see how this AI revolution is going to impact this developer and get 250K from this developer to invest in my tech startup, because
Yep.
it's all in the way we create value for this capital to be deployed. And that's the people I want to target. I want to target both people that are trying to raise capital, but also people that they want to open and broaden their spectrum in deploying money in different sort of meanings, right?
Yeah.
um, but for you, what's the other side of the medal? So who are you reaching to, and what's your goal of these conversations?
Yeah. I'll go back to my story a little bit, and I'll tell you what inspired me about and what got me excited when we talked about it. And we wanted to start it together. Um, 7 years ago, I started a family office with my brother, and we had raised a little bit of capital for my family, and we decided to deploy it into different types of projects. So the easiest part was getting the capital from my family. The hardest part is like, okay, what do I do now? What do I invest in? Where do I deploy this money? How do I build a strategy that's a fit for my family? What
Mhm,
are they looking for? What are they looking to achieve? What is how long should the investment hold period be? What type
mhm,
of assets? So these types of questions are the questions I had at the time. And these are the questions I hope through this podcast we can answer to our listeners who are looking to start investing, who want to learn about different investment forms, and they want to learn about their own personalities, because investment is very tied to your personality type. Are you a risk taker? Are you
mhm.
a risk avoider? Risk becomes the most important part of investing. Once you understand where you sit in the risk spectrum, you can decide which asset classes are fit for you and which asset classes are not. And I learned this because I was managing other people's money, which is my family. And as a family, we are all very different.
Yeah,
Um, my brother is the most conservative person you can ever meet. My other brother is also quite conservative. My dad and myself are the most aggressive people within the family. We're the most entrepreneurial within the family. So how do I create an investment portfolio that fits everybody, right? That can make everybody happy somewhat. You can make everybody happy, but somewhat. So that's what I wanted. That's what I want on our audience to learn. N- if you're raising capital, if you're an entrepreneur, you want to raise capital, learn where you can raise that capital from and what each type of capital coming in, what type of expectations they have, and what type of value they bring to you and your venture. On the other side, if you're an investor, you want to invest, you hear about tech, you hear about AI, but you don't know how to put money in it. You don't understand the tech side. Yet, let's say you're a family office investor that's been really focus on real estate. But real estate right now, as we know in Canada, is having a difficult time. So how do you create diversity within your portfolio? How do you invest in tech? Where
yeah.
do you start? Where do you get your deal flow from? Where do you get quality deal flow from? Not just any type of deal flow. Where do you get your quality deal flow from? Um, and if you want to learn to, let's say you're an economics student at university, you want to learn to invest, you're passionate about investing in the future. I want you to watch this podcast and learn what the different asset classes are. How do you analyze each investment opportunity, and how do you make decisions about investments? That's what I want our audience to learn. And what I hope to do is not just learning from you and I, but I want us to bring on specialized guests that specialize in a certain aspect, certain type of investment, and they can talk about what they're doing, what they're building, and what kind of opportunities they have for investor to put money in.
Yeah,
That's my goal.
and Sam, one very important note for everyone is that you and I are not trying to be all this like a fufa guru, all this kind of like
No.
wannabe teacher. We don't sell anything. Like what we are trying to do is having conversations, right? This is not an investment, advisory. Is nothing that kind of like resembles anything that tries to sell anything. We are literally inviting people, having this conversation, and say, do what you want with this information.
Yeah.
It's absolutely your own prerogative.
Yeah.
However, what I really want to bring to this table is that this industry really needs for everyone to take away these wannabe self-made teachers that they say, "Oh, I can sell you my investment course." All right. That's why when we talk, we said, I don't want to fall in that trap. Like we are having this podcast, this conversation. It's not a course. It's nothing.
Hmm.
But the people that are here are people that they run real businesses. Like they're
Yeah.
really sharing their own experience. It's not people. They're not people that they sell an investment course because they went online, they click next, 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 and they go and sell it, and you fall for the trap of putting 50 grand in EFT or whatever kind of like whatever other form of investment. We are literally looking as an entrepreneur, as an investor, as the guys that they come from being real estate tycoons to
Hmm.
real estate agents, so brokers,
Hmm.
that they
Hmm.
understand where they should invest their time. Because
Yeah.
one asset that we didn't really discuss is not just money, it's time.
Hmm.
Most important, invaluable thing, time. And to me personally, I really want people to go stop literally going and listening to anything that is said online, that is said anywhere, and look at real practical examples of people that they really are where on the ground.
Hmm.
I give you an example, right? There are so many business courses that people are taking,
Hmm.
but you know what is the best way to learn about business?
Actually doing it.
Maybe, yeah, this is the best thing, right?
Yeah.
And
Yeah.
you know what is the best way to learn about running a financial model? Building it, right? Because with all the respect to education and so on, but people they live too much into the fear of like underperforming. And
Hmm.
what I want to show is that everyone that comes on this podcast will tell a story where they screw up, where they literally fell on the ground, but that was the motivation to continue and to do
Yeah.
better, right?
Yeah.
Um, Jeffrey, like that I already mentioned twice, not to kind of like take anything off from other people, but I met your friend Reza, phenomenal guy with a phenomenal story, right? Both of them. Uh,
Hmm.
um, Angles that they come from wealth management after an exit, and your friend Payman, phenomenal guy that we share so much passion for. Answering to the question is not really bypass systems, is that what
Hmm.
is the best way I can optimize my capital,
Hmm.
not actually dump it in a place that is called a tax pool, right? How can
Hmm.
I really make this capital move, right? Great angles on like strategies of like investing now to return later when a certain situation will emerge. um, so I think what we want to bring to the table are really people that they come from our network, that they might one day come from a network that we are creating, that it doesn't
Yeah.
exist. By the way, one thing that I want to say, there is no expectation. Like we are literally jamming on this idea. Like we don't know how many episodes we're gonna make. We don't know how many seasons we're gonna make. We don't even know if there's going to be a second episode.
Yeah.
The only no that we know is that we want to make this community
Mhm.
interactions as valuable as possible to the people that are on the other side of the screen.
Yeah.
You and I can meet for coffee any day, but I would love that everyone that listening to kind of like ask question and kind of like challenge our opinion, because there's nothing wrong with challenging people's opinion. We're in a free world. Let's challenge it, right?
Yeah, let's debate it. And
100%.
uh, yeah, and both there's something in common about the world of entrepreneurship and the world of investment. They're all about going head first into uncertainty. You don't know
100%.
you don't know what's happening. You don't know what you're building is what it's going to turn out into. You don't know if what you're investing, the entrepreneur that you're investing in. You don't know how what their mental state is going to be in a year or 2 years, and how they're going to see things going forward. So it's about the world of uncertainty, and the more you talk to people who are going headfirst into uncertainty and see how they're managing uh, not just their emotions, but how they're managing their strategies, I think it would be a great lesson for
And
people to what.
Sam, I just want to hijack all this conversation because by the way, there is no script. We are just like jamming, right? It's
Yeah.
not. But I just want to interject one thing because I just received a message, and we are talking about the game of capital,
Yeah.
right? And probably I will have a video later in the next month or so about my company, Platformatic, right? I'm
You
not
got
the,
you gotta talk about those stories, man.
but I one of the things that I really want out of this podcast to be of value for people is that you can give capital, you can receive capital, but now that you have the capital in your hands, what are you going to do with it? How do I
Exactly.
take this capital and make it become this, right?
Yeah. Yeah.
Because the biggest risk is that in 3 months you end up with this, right?
And it
And
happens.
and it happens all the time. It happens to me, like, and right now there was a conversation that you and I had, and it was a conversation where, and it's a dynamic that I think everyone needs to learn, right? And it's like also you and I came to become who we are today, right? Learning
Mhm.
how to work together, and capital, is there, right, in a company when you have co-founders, right? We
Mhm.
always talk about individuals here,
Mhm.
but I think what I want to kind of like give as a perspective to people is that in managing this capital, there are many, many actors involved. And if you are a CEO, your goal is to use this capital the most efficient way possible because that's your fiduciary duty, right?
Mhm.
And one thing that I really would love, and probably we should do it. We should invite Matteo, my co-founder, and talk about the dynamic of capital because there's a very strong dynamic there, right? Capital can be the deal breaker in many relationships and in many things, right? But there is a moment where capital becomes the glue, right? Because capital needs to be that valuation, that survival, that growth is the drive for co-founders to glue and build something powerful together. And I just received a message from Matteo that I think is valuable. Screw it, I'm gonna read it. I don't care. Matteo came with an opportunity in front of me, and like there are different ways of capital, right?
Mhm.
And I want to tell this story, and I don't know if we're gonna cut it or keep it. I don't care, to be honest with you. But we had this opportunity yesterday, and he asked me a question, and he said, "What shall I do?" And I said, "Well, legally, it's yours, but I think we can play some alchemy there, right?" And so we converted something that he built in the past, completely unrelated to our company, to a new contract for our company. And he wrote, "Together, we are just an invincible sales team." And I think what we are trying to build with this podcast is that energy,
Mhm.
that invincible team, right? Where capital becomes the glue and not the deal breaker, right?
Yeah,
Because companies can be without money,
but
and
they're not without value.
but they can still be a highly successful company because
Yeah,
they know how from the ground up to rebuild the capital value. And you actually
yeah.
said it. There is social capital, can be social, can be
Mhm.
monetary, can be
Brand.
market, can be asset, can be brand, right? And then I think where I want to go with this is there are bigger assets than money in a company, and that's what we're going to discuss here. For us,
Mhm,
capital is nicer. We could have called it the game of assets, but it's kind of like it looks like if we were playing Monopoly, right? I think that the real conclusion that we will get from our conversation is that in every conversation we're going to define a new asset class that
mhm.
people can actually anchor for their own business.
Yeah, and they can understand, right? If we're
Correct.
talking about early stage venture, what is the
Right.
status of early stage venture right now? If you wanna start, investing in early stage venture, what does that investment look like? What can you expect? And the same thing with real estate. Real estate, you can go office, you can go purpose rental, you can go industrial. Well, which one do you pick now? Right? What do you put your money in right now if you're a pure real estate investor? If you are a private equity investor, what type of businesses do you go acquire? What type of businesses do you start investing in, right? So this is the question. These are the questions I want to answer. I want to be able to remove a little bit of that uncertainty that investors and entrepreneurs face every day, but still, it's kind of a it is kind of it is a little bit of a gamble, but it's an educated gamble. You go as educated as possible, you
Yeah.
study as much as you can, you look at as much data as possible to remove that as much as you can, the uncertainty that's in front of you, and you make an informed gamble and make
Yeah.
an informed decision. But it's still a little bit of a bet because you don't
100%.
know you don't know what's happened. You don't know how that entrepreneur is going to perform going forward. You don't know if he's going to make the right pivots. You don't know if he's going to be flexible or if he's going to be resilient. Is he going to be, look at, read the room intelligently, and be able to make decisions? You don't know about the person that you're investing in. Maybe you've done it before, but it doesn't guarantee that they're going to do it again. It still removes a little bit of that uncertainty if they've done it before, but there is still a lot of uncertainty going into an investment. So what we're trying to do is remove a little bit of that for each asset class and look at what is the best vehicles to invest in right now. Right now, the world is changing massively in front of our eyes. I think we're sitting in a very important moment in history, and this moment that we're sitting is going to get talked about in schools. Um, uh, 50 years, 30 years from now that we are living in today, which is the world is changing rapidly in front of us. So what do you invest in? What do you invest in this world? Like AI is taking over a lot of startups. It's eating up a lot of startups. It's eating up a lot of features of startups, a lot of
Yeah.
capability of even existing established companies. And I've seen at least, and I know of at least five private equity firms in software who are moving away from software because they don't know legacy SaaS companies where they're going to sit in a year from now uh, with AI multiplying its capability and its features on a month to month basis, is doubling this capability on a month to month basis. So with AI there, how do you invest in tech? How do you invest in where do you make your investments if you're investing in early stage or later stage VC? So I want to bring on these venture capitalists. I want to see what they're seeing on the ground in terms of their deal
Yeah.
flow. I want to see how they're changing their strategies with AI chasing after everything, right? And I want to also ask about other asset classes where if you're a tech entrepreneur and you're really exposed to that world, how do you diversify? How do you build a balanced portfolio so that if one industry goes up and the other industry comes down, you're still protected? That's my goal for this.
But yeah, and I want to close with one thing, right? We we want really with these conversations to help people kind of like rationalizing on what is their kind of like a capital transformation, right?
Yeah.
For there are, I give you an example, right? For Platformatic, that we are in a latest seed stage, right? Approaching Series A. Our main value is not really contract size, but asset value of that contract, right? It's not the
Mhm.
capital that the contract brings in. It's not just money. Is how can I use that to create different classes of assets that create a bigger value for my company, right?
Mhm.
And that's what I want actually to people to start learning, that is not about ARR only. It's about there is a multiplier. And I think once again, I don't want to mention Jeffrey or else it feels that basically I'm trying to praise him too much. But one of the point, the most interesting point of this conversation has been that it's not a simple multiplier, and that's where my philosophy is such a complicated formula to run. It's like also almost a genetical kind of like equation. Is a multi-factor equation. Is non-linear, and that's the beauty of this new wave of capital. And the
Mhm.
other thing is that the next 18 months are going to be for tech companies the biggest move to IPO possible, right? We need to accelerate capital acquisition and capital distribution. And I give you an example, like very, very simple. VCs that 3 months ago or 6 months ago, and you will smile because I'm saying something behind the curtain that many months ago, a few months ago, they says no. Now they're back with a big yes, right? Because the value changed completely, right? And that's because how we transform capital into assets, right? And that's I think the very interesting part. But look, we talk really too much, 40 plus minutes. Let's do this, Sam. Look, I have an idea. We leave it here,
Mhm.
and next time we are gonna talk about something incredible
What?
that we are gonna announce. No, we're gonna announce it, let's not reveal too many things. Let's keep the mysterious. Like, I'm the dark guy. I'm like Batman. I need to give mystery to this conversation. So let's invite everyone to
Yeah.
stay tuned. Subscribe to our channel, to Spotify, to any channel you prefer to listen to us, because it has to be in the comfort of your day-to-day routine to listen to these notions. And let's meet next time with everyone, and we are going to start unpacking one variable, this complicated equation, and we take it from there.
Sounds good. Thank you for
What do you think?
listening to us. Next time, we'll hopefully have a guest, and we'll see what Luca wants to reveal. I'm
Let's
excited.
go one step at a time. See you next time. Ciao, Sam.
See you next time. Ciao.